Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, January 19th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our instant mail address on AOL is CATEX-TV. In 24 hours and 29 and a half minutes, the United States will have a new president. Barack Obama will be sworn in. We'll have more on that later in the program. We have two bits of breaking news. A Danish airliner belonging to Star Tours made an unscheduled landing because of a fire on board in Casablanca a short time ago. It was a Boeing 757 fully loaded with 239 passengers on board. Apparently a fire began in the galley. The plane was en route from Copenhagen to the Cape Verde Islands, and the aircraft was forced to make an unscheduled controlled safety landing, as they're calling it, at the nearest airport, which was Casablanca, Morocco. It's not clear how the fire started. The fire was extinguished. It's unknown what the disposition of the airplane will be. In other breaking news that's coming in just before we went on, the Royal Bank of Scotland is making some noise that they may take a 2008 loss of £28 million, which would be the biggest loss in history of British economics. A £28 million loss possible for the Royal Bank of Scotland. We'll have a little bit more on the English banking situation in just a few minutes, but now to our main news. In the United States, the State Farm Insurance Company has severed its relationship with Satyam Computer Services. The insurance giant said late Friday that it has canceled its contract with Satyam, which is a global information technology firm. About 400 Satyam employees working at State Farm will lose their jobs. According to State Farm in a statement, the current uncertainty surrounding Satyam's future and potential impact to State Farm resulted in this decision. Of course, in India, the company's founder has admitted to falsifying accounting records for years, including $1 billion in fake deposits. At State Farm, the Satyam employees work on short and long-term IT projects. The contract was terminated Thursday, but many employees will remain for a short period to assist in the transition. According to a State Farm spokesperson, there's a lot of angst about these people because they're friends and co-workers. These people didn't do anything wrong. It's just very unfortunate. According to the Satyam website, the company has 53,000 employees that work in more than 65 countries. Satyam has been a long-time vendor for State Farm and is one of several vendors the insurance company uses for this type of IT work. State Farm is taking steps to ensure a smooth transition for the projects that Satyam employees are involved in. And according to State Farm, some of the employees could end up working for State Farm if their visas and correct requirements from INS have been met. Union Bank of Switzerland is going to take a little chunk of AIG. They're going to buy the commodity index business of AIG Financial Products Corporation. The deal includes AIG's rights to the Dow Jones AIG Commodities Index. The commodity index business comprises a platform of products of commodity index swaps and funded notes based on the Dow Jones AIG Commodity Index. Union Bank of Switzerland will pay $15 million on closing and additional payments of up to $135 million over the next 18 months based on future earnings of the purchased business. The closing is subject to regulatory and other conditions. According to UBS, no assurances can be given that any such conditions will be satisfied. They expect it would close sometime in May of this year. Here's the news on the British banking changes. The English have announced the second package of measures to help bail out the country's battered banking sector this morning. The government said that the new plan will spend billions of pounds partly by loosening credit markets. The Chancellor of the Exchequer, Alistair Darling, made the announcement this morning. The new plan follows a $55 billion bailout last October, which the government says has not done enough. This new package is expected to increase consumer confidence by calling for a new insurance program designed to protect banks from so-called toxic assets. Darling said that the rescue plan would extend the window for its credit guarantee scheme, which underwrites debt for banks that were recapitalized by the government to the end of this year. Under his new plan, lenders would have to identify their riskiest assets, which they could then insure with the government for a fee. It's also extending the Bank of England's special liquidity scheme, which expires this month. That scheme allows financial institutions to swap hard-to-trade assets for more liquid ones. And Standard & Poor's Rating Services this morning lowered its long-term sovereign credit rating on Spain to AA+ from AAA, citing structural weakness in the Spanish economy. S&P said that the downgrade also applies to institutions linked to the sovereign and, quote, reflects our expectations that public finances will suffer in tandem with the expected decline in Spain's growth prospects. According to Standard & Poor's, the policy response may be insufficient to effectively counter the related economic and fiscal challenges. If you are a consumer and buy gasoline, you know that the price of oil has dropped. Goldman Sachs says, hold on. Their commodity analyst Jeffrey Curry said he expects a, quote, swift and violent rebound in energy prices in the second half of this year. Oil may have reached its lowest point already after falling to $32.40 in mid-December. He says that prices are expected to rise to $65 per barrel by the end of this year. He said there's scope for a new bull market in oil. He said world oil demand is likely to fall by about 1.6 million barrels a day this year. He said a recent tactic of using supertankers to store crude oil to take advantage of higher prices later this year is difficult to profit from and is near the end of the process anyway. New York crude future for delivery in December of 2009, trading near $56 a barrel, currently costs some $15 a barrel more than March futures. In the oil market, this is a situation known as contango, where prices are higher for later delivery. This contango is likely to flatten as supply cuts by OPEC and other producers take effect, reducing the availability of oil for immediate delivery. OPEC, of course, started another round of supply cutbacks at the beginning of this month. Goldman Sachs said that the production will probably peak at 75%, meaning a reduction of about 3 million barrels a day. Morgan Stanley, for example, has hired an oil tanker to store crude oil in the Gulf of Mexico, joining Citigroup and Royal Dutch Shell, who apparently already have their own tankers in which they store oil waiting for the expected boom. Stock markets in the United States are closed today, so we don't have any updates on trading, but we will go to a word from our sponsors.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines such as the cash register began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from